Hello, Marc Ostwald from ADM Investor Services International. This week I'd like to discuss a little bit about the McKinsey report that we had earlier in the week, talking about the possibility that we might be headed for some form of Asian debt crisis again, much the same as we were in the 1997-8 period. And the most interesting table that they have in their report, I think, is this very first chart that I've got here, which highlights the share of long-term debt of companies with interest coverage ratios of less than 1.5 as of 2017. And I think the interesting point here is one can see that above all, the stress is in China and above all in India, where there's a very high level of non-performing loans. Indonesia features quite highly, as does Australia. Australia is more related to household debt, as is Hong Kong related to the property market. I think the interesting part of it, though, is actually at the very bottom, when we compare all of that, how badly the United Kingdom compares with all of these countries. So what is it that McKinsey's are actually highlighting? Well, they're highlighting the fact that in terms of capital flows, yes, the cross-border capital flows relative to 2007 when they peaked are a lot lower. However, actually in terms of capital flows into Asia, broadly perceived by most people to be the fastest growing region in the world, and therefore there is greater enthusiasm for all the corporate debt there, is now at its peak, and therefore there are risks here because there's so much money gone into Asian corporate debt and into also supplying Asian household debt. So let's move on to the next chart to actually see how this is panning out and compare it actually how this is panning out in terms of the dollar world. Well, as one can see, there's been quite a lot of pressure emerging. Yes, we did have a blowout like we did at the back end of 2018 in terms of spreads. They tightened all the way in as we actually went well below the levels which we saw before the start of the Q4 sell-off. But of late, we're now starting to see the spread between high grade and junk or high yield dollar bonds in Asia starting to widen out quite significantly. And that particular point, we need to basically concern ourselves that a lot of this debt is obviously in places like China and in India, and above all in the property sector, particularly with the meltdown that we're starting to see in Hong Kong in the property sector. Obviously there are some big concerns there. So how does that compare to what's been going on in the US market, in the pure dollar market? So investment grade, as we can see, it's not a dissimilar pattern. This is a longer term chart. And what one can also see is relative to where we were when we had the big funk back in 2015, the widening in spreads has actually been quite marginal, both in investment grade and in high yield. And actually the spreads that we're seeing, spread differentials between investment grade and high yield are not actually widening in the same way as they have done in Asia. So that brings me to the final table in all of this. And that is coming back to a theme which I've brought before, but it is something I note particularly this week, that this is the 40th week in a row that Lipper have reported outflows from leveraged loan funds. So if we're starting to see some distress anywhere in the US, it is particularly in that sector. And it would be not a great scenario if we were to see a tightening of US dollar financial conditions, that's both onshore and offshore, for these vulnerable areas. And it's an area which everyone needs to keep a very, very close eye on. And that's it for this week.